All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Rocket Companies has been in a bearish run since October 14th, and since that point, it has been hitting newer lows, and after having that slight recovery from about $19 and some change, which I've stated if we break through that, this could be well on its way to newer lows. And then the next support level is way down here at 1940, and it's far away from that right now, but at the same time it's pretty close. We're only about 50 to 60 cents away from that, and it is something to keep in mind. And from the 1990 almost $20 range, we're about like 20 cents away. So this bullish run kind of came to an end, and the same amount that it went up, right, throughout this volatility up and down is the same amount it's about to already accomplish going down. So a lot of profit taking here and uncertainty, right, for what's to come. I mean, it was great news, partnership with realtor.com, so forth. There's supposedly some type of business transaction going on with them and partnership or something like that they're going to proceed with. But then after that, Rocket Companies has nothing else to show their investors. So it's really interesting to me to see how quickly it's already falling down. It wasn't able to hold up. It's okay that it breaks through the 50-day moving average and it goes up and down, but right now it's actually being dominated by the bears. Super important to keep that in mind. So let's go ahead and look at our new resistance levels and support as they've changed, and our support is one of the lowest points that this has reached in this bearish run. So our support level today is super important for tomorrow, and let's look at our resistance. Some important numbers here. So the 50-day moving average is 2090. As long as we're below it, the bears are in control, and as long as we're above it, the bulls have gained control. So 2090 is the true goal right now for the bulls, to break through that resistance, which is actually the 50-day moving average, and also the resistance here from one of the high peaks reached yesterday. So this is an important number for the bulls. That 2090 mark is the 50-day moving average and one of the resistance levels to hit newer highs and get further away into bullish territory. So before getting there, the bulls have to break through the first resistance level though, and this resistance level is 2038. Right now we're currently at 2012. 2038 needs to be broken through by the bulls, turn into a support so they can break away and head towards the 50-day moving average. Super important. Now, just because 2038 does get broken through and they start to slightly move their way up, it does not signify that the bulls have gained control. The bulls won't gain control until they break through that 2090 mark, which is the 50-day moving average. 2038 is a resistance level that needs to be broken through so that the bulls can create momentum and a rally to work their way up to these newer highs and newer resistance levels, and it gives us a sense of direction, but it does not signify that the bulls have gained control by breaking through 2038. Now, on the other hand, we have our support level. This is the lowest point reached, and this is also going back to that 1990 range that I was talking about previously, and then all the way down to 1940, which is one of the most important support levels that haven't been broken through. And if it gets broken through, this will see newer lows and newer support levels. But 1996 is currently the support level. If that gets broken through, obviously this is moving further away from the 50-day moving average, getting deeper into bearish territory. So I want to emphasize to all investors, pay very close attention to how this stock is reacting and how quickly is it hitting newer lows and how quickly is it reacting in an up or downward direction. If it breaks through 1996 and it's tearing down and not giving a chance for the bulls to reappear, the bears are definitely dominating this one and are going to aim for that 1940 range. And then after 1940, as I've talked in all my other videos, the lowest point reached for this stock before it shot up and it actually hit new highs was way down here at that 1835, 1840 mark. So that's almost $1 away from that 1940 mark if it reaches it. But before getting to any of those lows, the first support level to bear in mind and pay very close attention to is 1996. Are the bulls trying to reappear if it breaks through it by hanging out sideways and having a moment to actually bring this up and build momentum? Or are the bears tearing this one down fairly quickly to newer lows? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.